This is the weekly market roundup brought to you by the Nebraska Soybean Board. I'm Bryce Duskett here on the Rural Radio Network. We're going to be breaking down both the grain and livestock markets this week as part of the update. PJ Condradt with Tredas as well as Mike Briggs when it comes to the livestock front, both standing by to share their thoughts and perspectives. We'll get to both of those coming up here in a moment. But first, a message from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the Nebraska Soybean Board Weekly Market Roundup. As I promised, joining me on the screen now from Tredas is PJ Condradt. PJ, great to visit with you this week as we first start on the grain side, in particular corn and soybeans. Give me your big picture thoughts of how those markets traded throughout the week.
Pretty soft week. Honestly, beans had some nice movement here Thursday. Friday, we were a lot lower to start the day on corn and really finished, I'd say, pretty solid on the week. Yes, we were lower on the week, but a lot of report positioning as we go into, I'd say if you really said to say there's a Super Bowl of reports, we got the one Monday and the one at the end of June that are usually like the two big ones. Those like 1, 2 in my mind. So, and which one's bigger, we never know. But that being said, it's been an up and down week, but as we look ahead to what could happen Monday, you got a tale of two things here of how many acres is it? Is it 94.5 or is it 96.5? Because that probably dramatically changes how the market trades. I think, when I say I think, I've read a lot and talked to a lot of people that would seem to believe the market's probably trading somewhere around that 95-ish million acre number. Now you get something above, trade estimates, the high end is around 96.5. If you get something above that or at that, it's going to be very bearish to the new crop markets. Now, flip side of the coin, we got grain stocks too. And our exports have been fantastic up to this point, right? So how much has actually left the country? Are we going to find ourselves tighter than we think? That it's already coming in a lot tighter than what maybe we would believed 4 months ago. So that's a big red flag. Some things to think about around that, though, bullish and bearish is, kind of the bearish side of things is, are we feeding as much? We have lower cattle numbers, lower chicken numbers, and there's a lot of sorghum left out there. We're only about 25% through our sorghum export consumption. So that means there's a lot more out that's going to hit the feed channels as we move through and ethanol. So that could be a bugaboo in our stocks. But on the flip side, it's showing what's actually been used and exports have been good. So maybe you get a little bit lower number and you get some support there. I think it becomes very these reports are tough, right? Because they can really move the needle on it. If they did come out at 96 million acres, that's a wet blanket on the corn market for the foreseeable future. But at the same time, there's opportunities and we have enough, I'm not a weatherman, but there's probably enough of drought out there that it's not like just your last shot. There's usually always an opportunity kind of throughout the growing season is can you weather the ups and downs or more the downs than the ups in the next 60 days while you're planting. If corn were to go to 410, that becomes a harder thing. So where are you at mentally in your risk process, and do you need some protection as you walk into this? And really outside of a handful of days there about a month ago, there hasn't been prices maybe that people are moderately excited to sell. So at the end of the day, this report, it sets the tone. And that's the problem with it, is it's going to set the tone for the next 3 months. And you had to expect them to probably have some sort of 180 yield attached to that. And that's what trade's going to instantly put in their pocket, and probably a 2 billion bushel carryout, give or take, even at 94.5 million acres. That doesn't argue $5 corn, but old crop stocks are tight enough. You get some weather volatility. Good things can happen for the farmer. So I think at the end of the day, it's really I have a love-hate relationship with these reports because they are fun. There's a lot to learn about, and there's a lot to talk about, and you dissect this 50 different ways. We're going to add acres. Cotton's going to probably go to more corn. The Dakotas, Minnesota, price structure has told you to add to corn. Will that continue if prices drop? How much has already been done? you also got to think the cost of production too. Are guys willing to borrow that much money in this interest rate environment? Those are all questions I don't know the answer to. But at the end of the day, I think I've said at the end of the day like 5 times now, but you got to really believe that the American farmer does love to plant corn. And so it's more of a consistent yield by and large. And so I would expect that corn number to be high, but throw a dart at it this weekend and tell me if it's 95 or 98, because it could be either or. But
yeah. Well, let's get to some of the specs of that report real quick, if you don't mind. If you got those on the top of your head, what time on Monday will the planting intentions report come out? What time should we be watching the markets?
It'll be 11 a.m. on Monday and into quarter, into month, and quarterly stocks all at 11 a.m. I think one interesting part here, Bryce, on the report too, is last year we planted, to not dive into numbers, we're roughly 3 million acres less of total planted crop. And that's a totality of all crops, small grains, everything. We're 3 million less than like a trailing 6-year average. Was that price? What was it? And as we look ahead, could those acres show back up Monday and inflate our acres? Or is price telling people, if you're a cattleman, maybe you go plant grass this year because you need the grass, right? And so those are the things I don't know. But at the same time, there'll be opportunities after this. You got to get through this report, let it digest, and then reset. But if you're worried about the down today, you better wake up Monday and find a way to protect the down. But I believe flexibility is the best way to do that, because there's a lot of factors out there that would tell you we could see higher prices. It's more of probably a when, not if situation, and how long can you financially weather the storm and mentally, health-wise, weather the storm.
Mm-hmm. Well, interesting thoughts there on the grain market, PJ. I appreciate those thus far. Really quick, I want to ask you on soybeans. We saw soybean market come to life a little bit, have a heartbeat in the trade, maybe not so much on the week-over-week trade numbers, but during the week, as soybeans rallied a little bit, is that the pre-market anticipation of seeing fewer soybean acres projected by USDA? Is that what it was all about, or something else in the equation?
I think it's pre-report positioning. It's fewer acres. Our carryout from a bean standpoint is still robust, even with fewer acres. But could you have some? At the end of the day, South America is your big driver on beans at this point, and so we look at that and say, well, we still need to raise enough. And I think there'll be opportunities as we get past this. If the acre numbers come out where they believe them to come out, that higher corn, lower beans will give us that shot. We really need to break above some of these moving averages, kind of the 1030 type level on the NOVE. You break above that and get above 1050. There's a clear runway from a chart standpoint to get closer to 11. And from my understanding, you start getting there. Things make a little more sense profitability wise. And I'm not saying that shifts acres or doesn't shift acres, but it'd be an opportunity to take advantage of for the acres you have in soybeans.
All right. Well, PJ, thanks so much for joining us. And up next, I'm going to get some comments on the livestock front. As earlier this week, I went down to near Seward, Nebraska, catch up with livestock owner and livestock analyst from time to time on the show, Market Journal, Mike Briggs. Here's our conversation again from earlier this week. Stock cattle markets, futures rebounding, box beef exploding this week. Is this a sign that the correction is over and higher prices are headed our way?
I think so, but the thing that interests me and concerns me at the same time is the volatility. It's just whipping all over. So you've got people trying to break the market and press it lower, and luckily it just keeps coming back. And I think it will come back. We're coming into our biggest beef demand time of the year. And I feel pretty good about it. Now, the question is, what's out there to derail it? Well, there's always the wonderful black swan thing, but you still wonder at some point, does the customer just say, I'm done, it's too high, I can't do it? I don't know. I'm pretty concerned when I see deals like DoorDash being willing to finance your food. That's a problem. If people are having to finance food, that bothers me and makes me a little nervous. But the overriding thing is I'm sorry, there's no more cattle coming to the market. There's going to be less and less and less. So typical supply demand, I think we just push higher here for a little bit.
Let's talk feeder cattle prices. Eye-popping. Look at the August futures
really
knocking on the door of $290. How is that putting a squeeze on folks like yourself buying feeder cattle?
Oh, it's just incredible. I had cattle offered to me yesterday. I have a little break-even sheet that I use, hey, so I can know where to buy cattle. They're $20 over my break-even. So if I wanted to buy those cattle are going to be instant $120 losers. Why you want to do that? It never works well starting in the bottom of the hole. You've already dug your hole, and the best you can do is hope to get back on ground. I don't do that. I won't do that. I don't prescribe to it. I had an order buyer call me yesterday, and he's like, why don't you see what you can do with these? And I hung the phone up, and I'm like, I'm not going to do anything with them because I'm not going to feed that, and that is totally unethical to try to talk a customer into feeding it. It's going to be a big struggle. Now it'll help when the grass guys get done with their stuff because they always go to the sale barn glassy-eyed and drunk, pay whatever. Feed yard guys, it's going to be tough to keep cattle in here. This is that part of the cattle cycle I don't like because it's really stressful because empty feed yards don't make money, but you're better off with an empty pen than you are with a pen full of losers. So that's my thought on it.
Those livestock comments in particular about the cattle complex brought to us from Mike Briggs. Again, he's a feedlot owner just outside of Seward, Nebraska. Now, folks, I want to let you know that information provided on this show is provided for educational purposes only and is not intended to influence legislation, government policy, or action. That's this week's Nebraska Soybean Board Weekly Market Roundup. I'm Bryce Duskett on the Rural Radio Network.